Hello and welcome. Thank you for joining us for this webinar. I'm Nicole Aubrey, the Head of Distribution at Associate Global Partners. Today, we have the pleasure of speaking to Ryan Quinn, Client Portfolio Manager at WCM Investment Management, to discuss the WCM Quality Global Growth Equity Strategy. Before we begin, some brief housekeeping for you and a message from our compliance team. Firstly, this is a live and interactive session, so we'd love to hear from you. If you have any questions that you would like us to address, please submit them via the question box in the control panel on your screen. We'll endeavour to get to these questions towards the end of the session. Please be aware this session will also be recorded. Secondly, this webinar is for educational purposes only and of general nature. It does not constitute personal advice and must not be acted or relied upon. The presentation is not an offer, recommendation, or solicitation. Ryan, thank you so much for your time today.
Happy to be here, Nicole.
So let's jump right into it. For those in the audience who aren't familiar with WCM, can you provide a brief overview of who WCM are?
Absolutely. And thanks, everyone, for taking the time. WCM Investment Management is a Laguna Beach, California-based money manager employing over 90 people, about 56 of whom are equity owners in our business. We manage over 90 billion US dollars in growth equity strategies. Typically, our funds are very long-term in focus. They are high conviction portfolios managed in a bit of a balanced approach. Historically, we have relied on and depended on our abilities to generate returns and alpha through stock selection rather than factor exposure or just general market beta.
Perfect. Excellent. Sounds really interesting. And what do you think the key themes are that are likely to impact global equities returns for the next 6 months?
Yeah, as I mentioned, being long-term focused in our portfolios, it leads us to being less reactive to short-term influences in market movements. With that said, we're certainly aware of what's going on. You can't ignore what's happening over this sort of short-term period if you're going to manage money for the long term. Our goal is to really, through philosophy, process, and portfolio construction, create a portfolio that is defined as or described as all weather. So it should be able to do well regardless of what kind of the world and markets provide for us. But again, we do have that macro awareness, which aids in our construction process. And really, our view on kind of the next 6 months doesn't differ very much from consensus. Clearly, there's some very obvious things in the market that are creating stock price movements that are influencing businesses, whether it's inflation, local economic strength, interest rates cuts in certain economies, ex-Japan, and will China, resume its growth trajectory or at least engineer its own kind of soft landing from its current economic struggles. Probably most poignant in the next month or two is really what's going to happen in U.S. elections from our perspective. However, it's been our experience that elections typically, especially in developed markets, create some short-term volatility, but not really long-term seismic changes. We are certainly prepared for volatility when volatile periods occur. We tend to try to upgrade the portfolio. If the market gives us a business on a discount that we are very excited about and hadn't gotten a chance to own, we'll take advantage and play offense in those periods. So we expect there to be ups and downs in the markets, no matter what's going on in the world. We always just want to be prepared to have our highest conviction portfolio invested with our clients' dollars.
Excellent. Thank you. And I think all of our clients are looking for an all-weather portfolio. So in 2023 and 2024 so far, the Magnificent Seven have contributed significantly to overall global equity returns. Do you see any signs of change in market leadership to other sectors or factors, like, for instance, value or small cap, or are we just more of the same to continue?
Now, your point's correct. The leadership of markets in, call it, the last 18 months or so has been fairly narrow, for good reason, given the strength of AI and what's happening in the tech space. It's taken kind of the lion's share of investor dollars as well as attention from investors. But beyond that, and look, we agree AI and tech generally have long-term tailwinds. So we do have exposure to a wide range of businesses that are going to benefit should that theme march forward. But there's also areas like healthcare, which really struggled in 2022 and 2023. as it sort of had a bit of a COVID hangover. A lot of the demand got pulled forward due to COVID activity in these healthcare names. So we're seeing a lot of kind of forgotten names in that sector that we're very excited about. From a valuation perspective, the narrowness of the returns have really led U.S. stocks to being fairly fully valued. However, ex-U.S. countries, especially Europe, look extremely cheap compared to domestic U.S. businesses. And then when you move down kind of the market capitalization range, small caps continue to have very reasonable multiples versus their next kind of 12 months earning than we've seen historically. Some newer themes that we're seeing attractive within our portfolio are areas like aerospace, defense businesses, as well as areas within the grid, the power grid, and electrification as a theme generally.
Oh, excellent. That sounds really interesting. Certainly a lot going on to look at in the portfolio. Now, corporate culture analysis is a really important part of WCM's investment process. Again, for those who are unfamiliar, can you explain how you define corporate culture and the resources that the firm has dedicated to this culture research, and what attributes your analysts are looking for?
Absolutely. It was kind of an aha moment for WCM. We really noticed how focusing on the health and quality of our own corporate culture in the late 1990s was leading to very positive business outcomes for our firm. And so we kind of scratched our head and said, well, how can we approach this qualitative input for the quantitative decisions we make in investing in publicly traded companies? What we really believe is that corporate culture will define employee behavior, and employee behavior defines business outcomes. That can be in a great market where everything's going well. It could be in a difficult market or kind of a lazy market. So having that corporate culture be something that can make an impact on employee behaviors will definitely lead to business outcomes. And we think understanding that will help us not only understand a company and how long we can invest in it and give us conviction from that perspective, but it sometimes triggers sell decisions as things start to deteriorate inside of a business. So it's a unique muscle that WCM has to allow us to make buy and sell decisions or even portfolio management decisions. However, at being a very qualitative input, you can't just say, oh, we care about corporate culture and just look at the businesses. You really need a framework. And our framework is really based on a three-legged stool where we look at the culture's alignment with the company's competitive advantage. We understand the strength or depth of the culture. How broadly is it understood across the business? And lastly, adaptability. Businesses that we buy, we expect to grow. Growth brings internal and external threats to the growth. And so a company's culture is going to have to be able to manage those internal and external threats. Our commitment to corporate culture is so strong that we actually have 4 dedicated business culture analysts on our team that work side by side with our fundamental analysts as they do their business analysis from a numbers side.
And there wouldn't be very many fund managers around the globe that have analyst team that are only looking at culture. So that is a very unique proposition that WCM are offering.
It's been really a reflection of the effectiveness of the culture work. We very easily could have tried this and said, oh, it's too hard, or there's no numbers or grading scale that makes sense. But really making a commitment to having that framework and having that framework being really impactful and helpful in everything from the railroads to semiconductor businesses to understand how well these companies are going to grow has led us to supporting the growth of our own culture work and growing that team individually internally here on our research squad.
Yeah, excellent. And so now turning more specifically to the WCM Quality Global Growth Equity Strategy, can you provide an update on the strategy's recent outperformance and talk us through the sectors and holdings that are the main driver of that strong performance?
Yeah, we certainly haven't been in the camp of having a portfolio of Mag 7 names only and outperforming the benchmark. The significant amount, those 7 names have been a significant amount of sort of the last 18 months performance in the global equity markets. but we've only owned three through that period. And our performance, by and large, has come through stock selection and through a diverse set of holdings, which again points back to that goal of ours to have that all-weather portfolio. We get nervous if one or two names are really driving performance. We won't, we're not going to turn them away, but certainly we want to see the whole portfolio be healthy as much as possible in as many periods as possible. Looking kind of year to date, technology and healthcare names have been really the best, followed by some select industrial holdings. Winners have come from holdings related to artificial intelligence and semiconductor chips, of course, that we have exposure to, cloud computing, enterprise software. And then in the healthcare space, the diabetes and weight loss drugs have made a significant impact on the world and are showing further positive impacts into cardiovascular health, reducing kidney disease, and even more successes that they're testing for at the moment. So those have driven strong performance in recent quarters. And then our newer theme, aerospace, has been a strong performer year to date as well.
Excellent. You mentioned just then you only own three names in the Mag 7. Can you take us through who you own and why?
Sure. So we had purchased Microsoft and Amazon in the past when markets were quite volatile. Microsoft is a great example of a really incredible install base with their Word and Office product. However, they are a leader in cloud computing, which is going to be integral for the future growth of the business. So having that great install base. Amazon is quite similar, with Amazon Web Services as that install base. They've got some ancillary businesses in grocery, and they're a global firm in e-commerce. They're the gorilla in the room, but they also have a very strong cloud computing play for them as well. And then we were able to jump on the NVIDIA train as well to when it became clear that not only is artificial intelligence here, but NVIDIA is going to be in a kind of winner take most position, given the decades of work that they've put into their offering.
Excellent. Thank you. Always interested to hear the views there. And AI, we've talked about a little bit. This has received significant investor attention in recent years. What are some of the other secular growth themes that WCM believe can deliver attractive investor returns and quality global growth strategy has exposure to at the moment?
These big trends that are happening in markets don't operate on their own. They tend to have lots of other areas that benefit as well. So certainly we believe AI is a long-term tailwind for some of our holdings, but it also means that our semiconductor-related businesses are going to be positively disposed there, whether you're owning the foundry that's making the chips or some of the niche players that have integral processes and creating these wafers that will be consumed by everything from artificial intelligence to personal computing, high performance computing, or even our cell networks. But we continue to be positive on areas like e-commerce as well as enterprise software. Healthcare, the GLP-1 or the diabetes and weight loss drugs are similar to AI in terms of the strength of their tailwind. But beyond that, we also like a number of life sciences businesses, some pharmaceutical businesses, and the trend of robotic surgeries taking more and more share inside the operating room, allowing doctors to provide less invasive surgeries with better outcomes in terms of efficacy as well as recovery times in the OR. Industrial plays we've touched on. We love aerospace, global defense, and electrification. And then within the financial sector, we prefer businesses like digital payments and payment processing, as well as some insurance brokerage businesses.
Excellent. Thank you. I'm interested, you've mentioned aerospace a couple of times. How do you, what's your exposure to aerospace? How do you access that theme?
So aerospace comes up when we were doing research on market sectors that had retaken their pre-COVID sort of growth trajectory. Areas like luxury have outperformed kind of their long-term growth trajectory post-COVID. However, aerospace had kind of lagged. And so when we found a business like GE Aerospace, which recently spun off GE Vernova to become a pure play aerospace business, they make the middle part of the engines that go on Boeing and Airbus center aisle planes. and they've got a pretty significant market share there, about 80% of the Boeing and Airbus planes. And it's a razor and blade model where they'll sell the engine, but then the maintenance contracts then create a recurring revenue stream. The commercial airlines are requiring their planes to fly for longer periods of time, which means longer maintenance contracts for companies like GE. And so we see those tailwinds and that razor and blade model as providing a really great growth trajectory for the competitive advantage of a company like GE.
Fantastic. Thank you. So interesting. And there's been a couple of changes to the portfolio recently. I'd love it if you could talk us through a couple of the new names that have been added and how they fit in WCM's expanding moat with aligned culture philosophy.
Yeah, I think earlier I mentioned upgrading the portfolio or making sure when we get volatility that we have our highest conviction names within the portfolio. And so a lot of the changes that have come recently have really been a reflection of the opportunity set that the market's really given us. So just going through the GE example, prior to owning GE, we owned a company called HEICO, which makes airplane components and parts that are, these are low cost purchase parts, high cost of failure, and they're very heavily regulated. And HEICO is one of the best in the business at providing these parts to the airlines and the engine producers. We got the opportunity to trade HEICO for GE. GE was in the middle of a spin out. It creates an opportunity to buy a business where the market hasn't fully digested exactly what it's worth. So we felt like that was an upgrade to allow exposure to aerospace. Similarly, I touched on the robotic surgeries. We had sold Stryker, which was more of a joint surgery robotic business, to buy Intuitive Surgical. Intuitive Surgical has a robotic surgical device called Da Vinci. It's got a lot more capabilities than the Mako would for Stryker, and with the similar characteristics of being really demanded by the surgeons in the OR because of the efficacy of the tool. The stock went down based on concerns that Intuitive would not be doing as many bariatric or stomach surgeries as GLP-1s help the world get fitter. But it was really only a small percentage of their revenues, and the stock was down too much for that. So we took the opportunity to upgrade into Intuitive Surgical there. And then as it relates to semiconductors, we had owned a business called Arista Networks, which we trimmed to help purchase Taiwan Semiconductor. This is a business that we had owned for a very long time and know extremely well. And they're the leading global foundry. Anything that's going to happen in the advancement of technology, kind of personal technology, all the way up to AI, is going to have to go through the foundries of Taiwan Semiconductor. And we think we are buying a great picks and shovels exposure to tech growth in general through owning that business.
Excellent. Sounds like some really great new additions to the portfolio. Well, that's been super insightful. So thank you so much for your time, Ryan. And thank you to everyone who's joined us today. If you asked a question that we didn't get to, then a member of our team will follow you up directly after this session. And if you have any other questions about the strategy, please contact us by calling 1300 052 054 or emailing us at invest@associateglobal.com. Thank you again.
Thanks, Nicole.